Hello and welcome to BQ Prime. I'm Hiral Dadia. Couple of stocks that are buzzing in trade today: HUL, Kesoram Industries, Sula Wines, as well as an HDFC Bank and MRPL. To discuss the modalities around it, joining us on the show is Kshitiz Mahajan, Managing Partner and CEO at Complete Circle Wealth Solutions, joining in. Welcome to the show, Kshitiz.
Thank you.
Kshitiz, my first question coming to you is, let's pick up an HUL. Company will be reporting earnings this week, and the stock is up and the top gainer as well. What's your view, expectation, as well as what would you advise an investor to do?
So, one of the stocks, I can say Big Daddy or maybe Elephant, which is trying to move fast off late by getting into a premium side of the brands. And, they are trying to change their portfolio from a totally FMCG company. They are trying to look at the nutrition side of the business also. And profitability in last 10 years on the nutrition side, like now they have acquired lately GSK Pharma, other companies also, I'm sorry, has gone from 22 to 33%. So except for 2021 quarter almost because of that COVID part, where they have reported double-digit number, the earning numbers or let's say growth is very, very slow on 4 to 6% basis in previous quarters. So they have to look at some other side of the business. So, out of every 10 household, one household is using HUL products by way of doing things. And the growth part has to come from a new thought process or let's say new line of business, which they are focusing on the nutrition side. As a nation, as a world, everybody is actually, moving toward the nutrition side on a healthier side. And I can make out, I was in Bombay day before yesterday, 60,000 participants in Tata Marathon. That's a record. That's a record. So that's a clear indication that, lifestyle changes is happening, and that will help HUL to grow their basket, nutrition basket. And I see that, there's nothing much, single digit growth from the numbers expected last quarter that will come. But yes, off late, they are focusing on increasing their premiumization brand as well as this nutrition basket brand. So let's hope how things will shape up. Although the valuations are really very stressed, the trading deal is in 60s at which it's trading right now also. So I'm just expecting that the focus which they are bringing in will come into play in quarter or two. So I see that valuations are expensive. So we are also looking at the stock, but there is no recommendation.
Right. So that's with regards to HUL. Moving on, Kesoram Industries. That stock is under pressure. The loss for the company has widened in this quarter to almost around 47, 48 crores. What do you make of the earnings?
So I don't know. Their 90% business is coming from cement. And, as discussing with you right now, I was going through their financials also. And they have booked some other losses also of almost 80, 90 crores in the balance sheet. And surprisingly, it's a Birla Group company, and being cement as a focus, I don't know what is the problem which is causing that widening of their stocks. Although FI Holdings is stable, but domestic institution is reducing the holdings in Kesoram, and somehow some part is missing from the financial, which we are also looking into. So let's hope things should fall in place, because quarter on quarter they are increasing losses. So I sincerely feel that people should refrain from investing unless and until they should have the clear picture of the way ahead for this company.
Right. One more news spike that I want to add to this talk is in terms of the company, wherein at the board meeting yesterday, they decided to put a 20-acre plot on the block, potentially to unlock value for the shareholders. Now, clearly, what they've said is that they're going to set the ball rolling to dispose of the property comprising its HHC unit, and they've proposed a special resolution for the same. And the resolution is required as the value of the property is considered to be more than 20% of the net worth of Kesoram Industries. Do you think that's something which could be having a bearing as well?
So if they will do this, I'm sure they'll be able to retire debt. Now, for all the investors who are viewing us, they need to understand any debt which is there on the book for any company which is not a AAA company will be, the cost of debt is in excess of 9.5%, 10%. So if they are able to do that, which is you're saying 20% of the block, and that's interesting news. They'll be able to retire the debt, and then they can see the upside coming on their way. And that's the right approach also, because whatever profit you're making is been serviced. It's been used to service the existing debt. So I think that's the right approach. If they will do this, I think that's then one can look at way forward of this company.
Right. And also, the exceptional item that you're talking about, the 173 crores, is on account of the possible disposition of the property following the accounting standards, right? So that's
Yeah.
one of the reasons why this additional exceptional item has been accommodated as well. So
Right.
that's with Kesoram Industries. Moving on, another stock that has been in focus is Sula Vineyards. In fact, the stock hit an all-time high yesterday in terms of the record quarterly gross billings that they reported for the third quarter. And in addition, you have Quant, which has gone ahead and did that stake as well. I mean, I think it's 10 lakh shares, if I'm not mistaken. What would your view be? Because in terms of listing, it was a pretty flat listing that we saw. And now we are seeing some bit of a pickup that started to come in.
So he will try to understand the industry. As far as India is concerned, liquor consumption is mainly on the spirit side. We are less than 1% on the wine. Having said that, they have 56 unique brands and 13 labels with them, and they import 19 brands from outside India also. The franchise is good. It requires 2 years for you to have a grape, vineyard, and then you can extract the wine from them. But the problem is that unless and until that culture of consumption will not go high, you will not have the right numbers coming to your pocket. That's why you are not seeing the right listing, not at a premium listing, and now some movement is there. So the culture is increasing, if you ask me. So it's 40-45% from France, or let's say 16-17% from China. But first of all, our consumption of liquor is less in India. Secondly, wine as a percentage contribution to overall consumption is less than 1%. So I think allow this entire thing to play out, because that will. So daily movement, I don't know, because I can talk about the fundamental on a long term basis. I'm saying it's a good franchise and culture is increasing day by day, but I think this will take some time for the entire story to play out. They are working on it. The festival which they organize, they are promoting it rightly. So, and they are already selling in now 20 countries. So one way of doing it, eventually organically the consumption and percentage share will increase in India. Second is that you go more abroad and do marketing there and have market share there. So I see that they need to focus on that, and that's how they can. That's what my viewpoint is. That's how they can increase their sales.
Right. So what would you advise an investor? Do you think someone who is not really subscribed to the IPO, this could be a good time to enter the stock from a long-term perspective?
So I can suggest what I feel. I don't want to advise anyone. This is my view that one should refrain from adding. But I will not add this to our portfolio. This is not our portfolio stock also. So you can do your due diligence. So I see that it's a good company, but there are better companies where you can invest into in the same space. Let's say not in the wine space, but yes, on the FMCG space or consumption space, you have better names like Tata Consumer. You have better names like ITC for that matter, which is a part of our universe.
Right. So that's with regards to Sula. Moving on, in terms of HDFC Bank, post the Q3 numbers, analysts are bullish on the counter, and plus there is a tailwind with regards to the merger as well. What's your view, and what would you advise an investor?
So we are in love with HDFC Bank. I'm an HDFC Bank employee also from 2004 to 6. I used to work with HDFC Bank. One bank which has grown at 30% quarter on quarter, then 25 and now 20%. Boss, what we are talking about, PAT of 12,500 crore. A bank is going to go at 50,000 crore PAT on a yearly basis with a market cap of close to about 9 lakh crore. It's available at trading P of 1890. So I'm saying we keep on looking for a new HDFC Bank. You have a bank which will become a new HDFC Bank, which is HDFC Bank only. Your deposit growth has grown up by 20%. Your margin is increasing. This is the best time here for any bank or financial company, because thanks to NCLT, RBI regulators, that many of the bad loans which have gone bad, there are recoveries in that. Although HDFC Bank has not faced that, But you see the overall book, 80% is your deposit book now. So I'm saying this bank has too much of scope for growth. They're increasing their gold loan part also. The lending part is also is on focus. So my sense is that one should look at. We are adding, we are increasing our application toward HDFC Bank, and you'll be surprised, that irrespective of we have 60 crore odd bank account, but still we have underbank, and scope for all these banks to go, the big banks, the guys who are doing the right things, to do things or to grow is much, much, much bigger. With regard to any of the global banks, we are too small. 9 lakh crore, I'm just talking about 120 billion, USD only. So market cap is too small. The big companies there are many banks who have more cash balance on the balance sheet vis-a-vis the market cap of what the HDFC Bank is. So I think we are very, very bullish on HDFC Bank, and we like this stock, and we are increasing our allocation towards HDFC Bank. Again, there is no recommendation due dividends.
Right. And very lastly, of MRPL and Chennai Petroleum, both these stocks are up in trade. There's lots happening with regards to what crude is doing, as well as you have the OPEC, which is coming up. The dollar index is something which has a bearing as well. And overall, you have the government, which has gone ahead and cut the windfall tax in terms of crude, the export taxes on aviation fuel and diesel. Any views on MRPL or Chennai Petroleum?
I don't know, but MRPL for me is like now it's a subsidiary of ONGC, and it's a first of all, we just try to refrain from any businesses which work for which work with government, because they have little long gestation. Second, numbers have been really poor of late, if you see, for MRPL, and the valuation metrics, whether it's price to earning or price to book, any metrics you see is very poor. They have problems with regard to recovery of payments, and in the same space, many people, people who are watching this, they must be looking at that. If the stock is available at a very low cost, it's a good stock. My sense is in the same space, you can get a better companies. Just look at that part. So let's say if you want to play the refinery part only, there is Reliance, there's ONGC, there are other good names which you can look at it. But I have not, being honest, not done much of, because one is that the metrics, it doesn't qualify under any of the earning metrics for us. So we don't track that stock. Whatever I have read about the stock, I can tell you one thing, that one can refrain from adding this to their portfolios, as you can't see, maybe you can catch the bottom of the stock, but you are not going to exit the stock at the top. So there is no clear vision right now about the stock or any guidance which is coming in the right frame of mind. So I will like to go with, if I have to add a PSU only, to maybe PPCL, HPCL, or ONGC rather than MRPL.
Right, so that's going to be coming in terms of the stocks that are in focus in today's session. Thank you, Kshitiz, so much for joining us on the show and giving us your views, and thank you, participants, as well.
Thank you. Thank you, everyone.